All right, we are live. Good morning, traders. B. James here, your disciplined day trading dad. And oh my goodness, did you look at the charts overnight? This is ridiculous. This market is, I don't quite have the words to describe it. I mean, I've only been trading NQ for about 2.5 years now, but this is the third all-time high I've seen. And this amount of volatility is, according to ICT, even unprecedented. So here's Asia session last night. 33 handles was Asia session. And look at this. The overnight Asia, London, and New York AM combined so far is 943 points, 3%. What does that mean? Well, that's a red flag. And what we do when, like lately, the overnight expansions, they've just been huge anyways. So we're seeing 1,000, or well, yeah, we can, I was going to say in ticks, but in terms of points, because I was just referencing points, you know, overnight we were seeing total Asia and London around 300 points. And we've seen triple that last night. If we look over here, move you over to this chart. So here you see this right here, this red circle. This is a average daily range. Overnight, we already hit the average daily range for the last 5 days. And so what that means for us today is it means cut risk. It means caution. It means light bulbs only setups. The nice thing that we do have, and I'll show you over again here on the 15-minute chart, we are engineering some trend line liquidity. And the fact that price is slowing down to engineer liquidity and still sweeping lows, that's a positive. But what we can kind of see is just, you know, anybody trying to long overnight just got stomped on. And this is not ideal. We want to see, we don't want to see price just diving and trying to long against that, because it just keeps smacking you. That's all it does. What's interesting is we got 3 minutes till open, and I looked back at a lot of my losses last night, and I broke them up into, well, I'll tell you what, let's look at that in a minute. I found some really interesting statistics about my losses and liquidity pools to target, and I think it'll be helpful for about anyone in reading the charts. And I'll share that here in just a little bit. But the one thing I did want to note is, at least here on the 15-minute, we're starting to build some trend line liquidity. But at this point, I'm not even sure where we're going. It's so we formed some relative equal lows on the 1 hour. We swept those. We're coming into this 1 hour fair value gap right down in here. We have 2 minutes till open. I just want to kind of recalibrate a little bit. And then here on the 4 hour, we still have 4 hour lows below. We have these two swings. We're in a 4 hour gap. There's a gap below. We are in discount in both the daily and the 4 hour. And we've reached one standard deviation of this bearish breaker up in here. And yeah, so I'm really curious to see what happens at 9:30. I mean, this sell-off is just massive. So let's go back in and get on our 1 minute chart. Which, gosh, I mean, I like this for a long. Like, so it's about 90 per contract. I mean, despite what the overnight looks like, this is setting up to be an A+ setup if it closes above. But just because it's an A+ setup does not mean that it's an A+ trade, because in part it depends on the context of the trade. All right, so here we got 9:30. All right. ESYM selling off, at least on the candle so far. First candle. What do we got? We swept that 1 hour low. We tapped the 1 hour fair value gap. We tapped the 4 hour fair value gap, consequent encroachment, though those are both reused gaps. I don't like that as much. So I think I'd like to see it trade down a little bit lower, sweep some liquidity first, which it looks like it's going to do. So cool. Now, what I don't want to see is I don't want to see it keep just distributing for sell side aggressively. If it gets too far away from this liquidity pool right here, then that's going to make this a less probable trade setup. All right, swept 4 hour low. We're in a daily volume imbalance. So there's going to be no fair value gap there. Look at that aggressive response. Wow. Jeez Louise. If it closes above, I'll go in with one contract at least. It's not closing above. Bummer, because I bet this next candle's just going to rip. All right, so now this candle has swept these local liquidity pools, making this less probable of a long. It still is a breaker. So we're going to take this as a breaker. The only downside is this swept this liquidity up in here, which, as I was saying, it's makes it it takes away from the high probability setup, and it's something I'm really trying to flesh out in my trading, because this would be breakers often do this, and but I'm taking more inversions here lately. So I don't like this candle here. I want to see some snappiness out of this towards buy side. Otherwise, I'm just offside. It's going to get stopped out. No big deal, because just simple, small cut risk trade today. Now, I don't like how it's stalling out here. So this here is going to be a break even. Probably even this high right there, actually. So we'll go break even now on this trade. If it's not going to run, it's not going to run. All right. So break even on that one. Maybe my break even should have been this high right here because it's still pretty volatile on the lower time frame here. Well, it was actually the right call, apparently. Look at that. But more importantly than that, I followed my rules. And the thought I just had here is I'm wondering if I should drop the breaker from my model anyways. I take like 90% inversions. And note to self, I want to go back and look and see the hit rate of my breakers. All right, so that all happened pretty quickly. Let's just review that trade real quick. I want to see happened quicker than I could even make notes on the trade setup. So results were break even, account was PA8, cut risk. So the trade model was a 1 minute iFVG breaker. And I've got conflicting information on the trade grading. I'm curious. I'm actually going to pull something up here. I think I changed my trade grading. Yeah, I think I did here. Okay. So I'm gonna give this trade. Oh, it's conflicting. I'm gonna fill it all out before I. So the logic was deep discount. Longs to trend line buy side liquidity. So that's the logic of the trade. The pros, we had multiple fair value gaps, 4 hour, 1 hour liquidity. We had multiple SMTs. Oh, the consecutive candle SMT is gone. So we had a single SMT. So we had 12 a.m. opening range gap targets, London order pairing targets. Cons, we had 3% overnight was cut risk, and we had ADR hit. So the context clearly scored. The higher time frame aligned. Ultimately, yes, we have not had any daily closures. We did have probably a 4-hour market structure shift, but a 4-hour bearish market structure shift in a bullish market is not meaning that it's actually bearish yet. Time was aligned, yes. Discount, yes. Major liquidity sweep, yes. ERL to IRL target, yes, that's still intact. No unresolved opposing liquidity. Effectively, yes, nothing I was worried about. So this was the 50% here, which was 3% overnight expansion. A grade, so he did have some strong displacement, yes. So really, I'm going to give this an A grade, but note that local IRL is typically a B. The price action grade, I'm gonna call this a B. So it's very whipsaw across this opening range here. So what would you call it? It's kind of like a 5-second or 15-second HR LR kind of thing. So it's going to my target without me. And even curious. So here would be 1-to-1 if I would have used the low at the body of this candle, but that would be a 3. I couldn't have taken that trade. So if that's not a pro. So yeah, I would say, so trade management, let's say I went break even at the swing or about 90% of my TP. So that was totally legit. Emotions, relatively level. But some of the notes here is I overrode the local internal liquidity sweep. Grading criteria. So does that mean there was a little bit of emotion, like a FOMO? Maybe. But it was also everything I wanted to see. So there's just that one thing that wasn't quite right. Not enough that I'm going to say I like really, screwed up or broke rules or anything. There was a lot going on, and especially, I guess, given that I think I'm right on the bias for the morning. But we look at YM. YM's looking beautiful. Even ES is looking a little nicer. All right, so 932 long presents take break even. All right, so just chilling and being patient for a minute, I guess. All right, so the thing I wanted to share with you earlier before that happened is reviewing some of my trade setups. I reviewed the last, I think, 108 trades I've taken. And one thing I was comparing was here on the lower time frame, what did price look like? And there were kind of like 3 variations that I looked at. And essentially one was where price just plummeted and there was a setup. And maybe what I'll do is I'll draw it a little bit more over here. So here's version 1. Another version was where maybe price was coming down. Let's do it like this. Maybe there was a swing right there, a couple swings. Price kind of made some small swings on the way down. and then reversed. Okay, so that's version 2. And then version 3, I don't know if I'm enough room to draw this, but looked a lot more like this. So here's the 3 versions. And what I found is this version here had a 49% win rate, which is kind of low, I thought. This version here had a 61% win rate. Like, that's a significant difference, right? And then this version here, you got any guesses? 76% win rate. Look at that difference between 49 to 76. That's almost a 25% increase in win rate by noting how the local candles, so in this case what I'm considering local is 1 minute time frame candles, are forming. And so when I looked at this, what I saw here was we have a swing, a swing, a swing. I didn't like this section right here because we can see this deep sell-off, so no swings. But then we started forming some more swings right in here. And then we had this swing too. We sold off. Maybe I'll make that different color so it's easier to see. So for me, sorry, y'all, I'm trying to figure out where to put all this. I classified this as a structure that looked a lot more like this 76% win rate than either of these other two. Trying to get it so you can see it. There we go. Swing, swing, swing. Local internal swings. And that's why I overrode the B plus downgrading I should have given this in theory for taking out this swing and this swing. There was still more swings to take out. So ultimately, I was right on the bias and the direction so far. Stop loss should have been below close, but that was so big. Went with swing below iFVG. So what I'm saying here, just want to make note for myself, is typically I like to put my stop loss below a close. The candle that closed has a closer and open outside of the iFVG. So in this case, I'm longing so we can see the open is down here. And usually it's more like in here or something like that. And that's where I typically like to place my stop loss. That wasn't an option here. I couldn't have taken this trade. And maybe that would be something to say is, you know, just questioning, like I got to question all my decisions. You can't just constantly justify why you did something and assume you're right. So I just want to question. You know, my rules typically say, I guess my rules, let's look at my rules. What do they say? So my rules say the stop loss goes below the inversion with just a little bit of space. So I didn't break a rule, but it's just something I like to do. So yeah, kind of high resistance for this opening range so far. Which makes sense. Huge overnight expansion. All right. All right, so just kind of looking around on some of the other charts. So here on the 15-minute, here's this trend line liquidity sitting up in here. This was my target. And even if price isn't overall bullish today, I do think I did think it wanted to come up here and at least form another touch to this trend line, which gave me plenty of room to be able to get 2.5 R out of that trade. We do have this 15-minute fair value gap right here. Still have 7 minutes until this candle closes, so don't quite know yet if that'll confirm as an inversion or not. So here on the 1 hour, we did have a gap forming. That's no longer there. A SIBI, sell sign of balance. In 7 minutes for this candle to close, if it closes above this previous bearish candle, that's a C2 closure. So this candle swept this candle's low and then closed above this high. And if that's the case, if it does that, I would anticipate some kind of, even just some kind of retracement. So here's 50% of this range on the 1 hour chart. All right, so coming up here. So yesterday, trading scorecard A+, no missed R, and 99% performance. I'll take it. That's exactly what I want to see. Still had I had a poor week, the week of the 7th, where I call this just a bad luck week, where I had several winning trades that went wrong, and instead of winning the trade, I lost it, causing a negative R in the trade, obviously, and then missing. So missed 1.75, missed 1.75, missed 1.72. You know, a lot of bad luck in a row, and only one of the days was what I would consider my fault. Well, they were all my fault, but any sort of emotional like rule breaking was on this day. The first one, I forgot that I had reduced my daily loss limit, and and I did that for the FOMC week prior because I wanted to limit myself to no more than 1 loss per day. I'm not even showing you the right chart screen. FOMC week, no more than 1 loss per day. And then come to this week here, and I forgot to remove that daily loss limit. So I took a loss because it hit my loss limit, my lowered loss limit, my up, I don't know which way you want to say it. I decreased my loss limit, took me out of the trade, and then I lost the trade that I should have won and never hit my stop loss. So things like that happened last week. All right, we got about 4 minutes left until 10 a.m. when the 1 hour candle, the 4 hour candle, and the 15-minute candle all close. This is not very pretty price action. I'm going to have to update my SMT indicator, which means it's probably going to lose all the default settings that I created or I set, and I'm going to have to redo them all. It's one thing that drives me a little nuts about these TradingView indicators. Like, you're telling me you can't store the default settings and then replace them? Like, that doesn't, like, software doesn't work that way. When you update the core software, you know, the theme, if it's like a website theme or anything like that, it doesn't have to rebuild the theme every time. It's ridiculous. All right, so we swept this high. So the markets are relatively in sync. YM's coming up here to probably the midnight open and probably the weekly open. So here's a fair value gap. Coming up to the AM high, and then it's going to find resistance at the previous week's low right there. We do have another swing right here. So let's see what it does. And you know, part of what in trading, like I remember earlier on, it was hard to do, is just sit through this. And like I would have been triggered, like, oh my gosh, I got tapped out. But I was right. And I'd be like, how can I get in on this? Like, oh, you know, maybe here's a breaker too. So maybe I can long this and, you know, whatever, trying to find my way, some way into a trade, or like, oh, it's an order block. So here's this, you know, breaker on top of a breaker on top of a breaker on top of a breaker closed above this order block. So I'm going to get in on this. And like, sure, it would have played out right now, but you can sit there and do that all throughout this garbage and get yourself stopped out a bunch. You know, my model presented down in here and was relatively high quality. So I took it, but I don't have anything else to do in this price action right now. Other than just be patient and watch it and see what happens. All right, so this high has been mitigated. So here's potentially some targets for this move. So if it's bearish, it's going to come up to one standard deviation and then continue for delivery towards sell side. However, if it's bullish, then likely see 2.5 standard deviations before any significant reversal, which that lines up with some of these other swings. So cool. All right, so there we go. 10 a.m. we have this 4-hour candle closing. We got multiple, multiple SMTs down here. And we have consecutive candle, we have swing SMT, we have this 4-hour C2. So the candle opened, swept this low, closed back above this low and above this opening price. So that's a very bullish 4-hour candle. Doesn't mean it will, but it's bullish. So here the 1 hour gave that C2 closure just as well. And here's this first fair value gap prices in. Here's a second fair value gap. And then here on the 15-minute, now that's a strong inversion and breaker. I guess we'll call that the breaker. Look at that expansion. Here's a tailless candle. So called it completely right. I just got unlucky. All right. Bum, bum, bum. Boy, YM is just like beautiful. Like that's exactly what I would have wanted to have seen. That kind of expansion. Now, if you're bearish, you might be this is like a place that I'd want to start looking for shorts. We've swept buy side liquidity. We're forming SMT. Got a little bit of trend line liquidity built up. Not amazing, not bad. Some serious volatility here. 300 ticks. So how much did this move? This whole This is, you know, this expansion here. 1,500 ticks, 1%, 390 points. Wow. So let's just count this as the breaker, and just curious to get some ideas. Targets, like that's just huge. Look at that. It's not going up there like today, not at all. Or at least I don't think it is. With this kind of overnight expansion, I was only expecting some kind of retracement or manipulation up. I kind of expect a little bit more so consolidation. So for the rest of the day, I don't see it moving a ton. You know, if this is the daily candle, right? Depending on if you want to go with the true day open or the midnight open, doesn't really matter. But ultimately, you know, it's like price opens, makes a high, makes a low, and makes a close somewhere, right? That kind of thing. And the close could be wherever. It could be up here. I don't think this is going to close a bullish day. But I did expect a reaction down in here. And we got that. So my target was met. Which is a little lame. I'm not interested in shorting this. It's taken out way too much sell side liquidity. It's taken out too many buyers. I don't think it's going to expand lower today. All right, so 10-10. Kind of the next main target. We actually have some relative equal highs right there. But at this point, I don't think I'm going to get any setups today, any more setups as well. I feel like whatever move was going to happen has happened. I don't expect anything more out of the market than this retracement that's already happened, at least for me. And then given the volatility in these candles and the inability to be able to size my stop loss properly for cut risk today, I think I'm going to call it here. I think I'm good with one break-even trade. I'm happy with my performance. And I'm also happy with calling it quits when I feel like it's not a time to just sit in front of the charts. I'm not seeing anything forming that I'm going to be interested in. And so that kind of tells me I need to let candles play out for a little while before trying to force something. You know, some days in trading are red, some days in trading are break even, some days in trading are green. And it's important to know what percentage of the days we should expect each of those. So look back at your days, count them up, figure out what percentage of the days and weeks are red, what percentage are break even. I think my break even weeks are 17% break even weeks kind of thing. And just roll with it. So yeah, maybe I'll pop in for the lunchtime and see if there's anything happening there. I'm not interested in shorting any of this at all. So I think if there is a short to play out at this zone, it's not for me.